Hello traders, what's going on? In the previous lecture, I have completed about the basic characteristics, the chart pattern on a price action chart. So in this lecture today, I will talking to you about the principle of Dow theory on a price action chart based on technical analysis. So the Dow theory is the most important and trusted theory of technical analysis. Even after 100 years, the Dow theory is still considered as an integral part of technical analysis. The theory explains how the stock market can be used by investors to understand the health of business environment. It was the first theory to explain the market move in trend. Now let us discuss the principle of Dow theory. So let's start. Dow theory is the important part of technical analysis. This theory helps to understand the better market and identify the price and volume movement on a price action chart. It considers a valid trading strategy for you. Dow theory has three trends: primary trend, secondary trend, and minor trend. So the primary trend is the major trend in the market. The primary trend is referred to as your best friend. It indicates that how the market moves in the long-term and short-term trade. This means when the price rising up or upward direction, then it considered to be an uptrend. On the other hand, when the price falling down or downward direction, then it considered downtrend. So primary direction is either bullish or bearish, and it also reflects the long-term direction on the market. You can trade on going trend to minimize their losses. Secondary trend are considered to be correction of primary trend. This is like an opposite movement of the primary trend. When pullback, the primary trend is upward direction, then the secondary trend is opposite direction. That means it downward direction. Minor trends or short swing are fluctuate the market movement on a daily basis. It also short-term movement, they are totally irrelevant. Most of the time they depend on news and can be considered noise. This trend lasts for less than 3 weeks and go against the movement of secondary trend. Dow states that there are 3 phases to every primary trend, which is the most important trend to be paid attention to you: accumulation phase, public participation phase, and distribution phase. So the first one is accumulation phase. When the primary trend is going to an uptrend, the price rises up, then bullish market are found. On the other hand, when the primary trend is fall down, then downtrend is formed. Those bullish and bearish market trend is known as accumulation phase. Public participation phase. More investors enter the market as business conditions improve and positive sentiments become evident. This result is higher or lower prices in the market. Distribution phase. This phase takes place when economic condition news reach their peak. Many investors become more encouraged and public participation increases as media keep on publishing bullish stories. Volume are confirmed by trend. Dow recognized volume as secondary, but important factor is confirming price signals. Simply state that volume should increase in the direction of major trend. In a major uptrend, volume would increase as the price move higher, and in a downtrend, volume should increase as the price drop. Dow considered volume as a secondary indicator. He based his actual buy and sell signals entirely on closing price. Until there are clear signs of reversal, the trend should continue. An uptrend is defined by a series of higher high and higher lows. In order for an uptrend to reverse, prices must have at least one lower high and one lower low. And you also know that the reverse is true of a downtrend. One should keep trading on going trend unless there are clear signs of reversal given by technical tools and indicators. The main goal of Dow theory is identify the trend in order to catch the big market movement which are taking place in stock market. The theory helps investors to develop their better strategy for maximizing their profit. This theory is still relevant in the current trading market. So not more today. Have a nice day. Goodbye.